What's up everybody? Welcome to the Stocks channel. My name is Corey and today in the stock market we see a massive sell-off across the board. So the question is the bear returning to the market? First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so first things first, this was a very important day of price action and there is going to be a very choppy month ahead of trading, and I'm going to do a very detailed members only video of exactly what's coming in the next month. But today's price action did tell us a lot of information that's going to be very important going into the month of September. Now also please remember to smash that like button and help these videos reach 2,000 likes. And I will continue to bring you fresh hot stocks each and every week. Now to address the question in the introduction, is the bear returning to this market? More than likely the bear is still not returning to this market, but there is going to be a lot of volatility and a lot of chop before we can say that that's the case. Right now there is going to be a very big tug of war between the bulls and the bears for battle of this market. And we will address a lot of the back-tested data because as you can tell with today's price action, we did reach the average drawdown from the date of the signal, which is the back test that tells us the bear market is over. So if you think about this as the average bear market, we are still in the average drawdown range, which is exactly what you would expect to see because we are not in an extremely bullish market. And if we are in an extremely bearish market, yes, we could still reach the max drawdown. But if we just want to go ahead and say this is going to be the average market, we have now met that drawdown with today's price action, which is going to be something we want to pay very close attention to. Alright, so with today dropping 3.38%, we definitely lost a lot of critical support, and your first sign to get risk off was when we got rejected from this resistance and sliced down through 416. Remember yesterday I told you that if we get a strong rejection from this gap fill, that was going to be extremely bearish because the bears do not want that gap filled. And the bears very obviously flexed their muscles today and showed us that they are still wanting control of this market because they showed up at the gap, which is exactly where they needed to show up, and they flushed the market all day long, and there was just no buyers that were strong enough to stop this from happening. And that is why I always give you risk levels like SPY 416 so that you know instantly when you need to get more risk off. So when I give you risk levels, make sure you're understanding that below those levels you need to get risk off, and risk off means you need to reduce your long exposure and go to cash. Whether or not you're shorting at resistance and buying at support is completely up to you, but the average retail trader is going to lose a lot of money trying to short a market, even if it's a bear market, because you can still get very strong counter trend rallies. So just be very cautious because we are below the risk off level, and we did see an extremely bearish candle that lost a lot of support levels, and we are sitting right on top of the average drawdown. And there is no telling whether or not we're going to see the max drawdown or if we're going to continue lower to the next support at 401. Now, if you're having trouble drawing trend channels, just use a regression channel, and you can very clearly see from the regression channel that we are breaking out of the uptrend, which is instantly telling you the bulls are going to be a lot weaker. So this is not going to be a strong market trend in either direction, and it's going to be extremely choppy. To repeat, this market is going to be extremely choppy. That means it's going to be difficult to trade no matter which direction you're trading in because the market is going to have plenty of whipsaws in both directions. So do expect a very volatile September, and do remember that just because you break down of a channel does not always guarantee that the trend is broken, but it does tell you that the trend is weakening. So this is going to be a much weaker market, and I know a lot of the fundamentals are coming into play, and the chart is now showing that. And that is why I say you don't need to understand fundamentals, you just need to watch price action, because I don't need to know anything in the news to see that this is now a bearish chart, because the price action sliced through two critical support levels in one swift motion. There is nothing you need to know other than just following price action to know that that is not bullish. So you are going to be a lot more risk off until SPY can get back over 416 because this is back to a falling knife scenario. Anytime you get a large bearish engulfing candle, you do not want to blindly try to catch a falling knife. So keep all of that in mind going into next week, and do remember what I said that it's going to be a very choppy market. We have the average drawdown level right around 406 and the next downside price target at 401. And if we lose 401, we are coming all the way back down to 393. And if we reach 393, that is going to be extremely bearish. The bulls do not want SPY going all the way back down to 393. So if we start breaking down below 400 to 401, you instantly need to be getting a lot more bearish, and you need to be very careful trying to catch the falling knife. So without a doubt, this is a risk off market, and you can get more risk on if we can at least reclaim 408. So your risk on levels will be above 408 and above 416, with the much better read on the market being the risk on break above 416. And then you're getting even more risk on if we can break back over 421. It's really as simple as that. You need to be risk off until we break above these levels, or you need to be trying to short the market at resistance, which is completely up to you of whether or not you're going to try to short this market. So watch that very critical support to the downside and do not blindly buy at support. The definition of a falling knife is that you need to wait for price action confirmation to show that that level is support, which means you're going to need to go to smaller time frames and wait for some green candles. Also note, we had huge volume today, so high volume selling is always something you want to be cautious about. So do respect the fact that this is a very bearish day and you instantly need to get more risk off. In the NASDAQ 100 triple Qs, we were down 4.1%, and the triple Qs also lost 2 of our risk levels because last night I told you we're getting more risk off below 317 and below 314. We sliced through both of those levels in the same exact day on higher volume selling, so without a doubt we are instantly more risk off, and we are currently sitting right on top of a potential support level, which is our support at 307.5. If we lose 307, we're coming all the way back down to 297, and that again is going to be extremely bearish. So the bulls do not want to see the triple Qs coming back down into the 290s, or they are going to see the return of the bear market. So bulls will try to protect this support right around 307, so it's a lot more bearish if that level fails, and you're only getting more risk on if we can break back over 314 and get back over this gap close at 322. So for that reason, you're expecting to see resistance at 314. So if that level fails, it does show us that the bulls are starting to gain strength back from the market, because there is no way we should break back over 314 if the bears are still in control. So watch those critical levels very closely at 307 and 314, and just make sure you're managing your risk very tightly, because as you can see, the triple Qs are also losing the support trend and 2 of our very critical support levels. On the Dow Jones, we were down over 3% today, and again, the Dow Jones also signaled risk off because we did break below 2 of our risk levels at 330 and 329, and then we came all the way down to close below 324, which is extremely bearish. All of this is happening on higher volume selling, and you can very clearly see that was a risk off day, and the next downside support is down here right around 318 to 319. Your risk off while we're below 329, because that is now going to be resistance where the bears will show up, and you're only getting more risk on if we can get back over 329 and 333, and then you can start getting more bullish for the gap closes above at 336 and beyond. So be very cautious. This is still a falling knife, and the next downside support is not guaranteed to hold up, so do not just blindly buy at support while we're in the short-term downtrend. As you can tell, we have that gap all the way down here at 307, but the bulls will want to hold the Dow Jones above 319, so you're getting a lot more bearish if we break below 319. On the Russell 2000 IWM ETF, we were down 3.29%, and again, we got the risk off sell signal below 191, and we also broke the support trend line, so we could be coming all the way down to 184.5 next. You can get more risk on above 191, but you need to stay risk off below that level because it's now going to be resistance. If we break back over 191, you now have resistance at 195 and that previous high at 201, but we could come as low as 178 if the bears are taking back over, and you'll know the bears are in control if we lose that support at 184. On the ARKK ETF, we were down 6.42%, and ARKK was bouncing off 43, and it looked like it wanted to close the gap above, but the bears defended that gap and sent ARKK all the way back down to 43, and we even squeaked out a close just below that support. So I continue to remind you, this is a bear market in the ARKK ETF while it's below 47, which means it could still be trying to get all the way down to the low 30s. Below 43, the next support will be right around 40, and below 40, we're coming back down to 36. On the VIX, we were up 17.26% today as the VIX had a very volatile day and did spike back over 24. And as you can tell, the VIX never did fully close the gap below at 21. Now, there's no guarantee when gaps will get filled, but we do know eventually that gap is going to get filled. So you need to be more cautious while the VIX is above 24, and you can start to get more risk on if the VIX starts crushing back down below 24. On Bitcoin, we're currently down just over 4%, and you can clearly see Bitcoin getting rejected from that resistance because it continued to fail to close above that level, so the bears are still in full control, and this is significantly increasing the chance that we come back down to retest 19,000. Remember, 19,000 was very strong support, but if we do break below that, we could see a very quick trip down to 12,000. Even though I don't know if Bitcoin is going to 12,000, that is going to be the next likely target if it breaks down below 19,000. Crypto winter should be ending very soon in September, so you can continue to accumulate if you're willing to hold for the next 2 to 3 years. But as a trader, you need to be risk off until we can break back over 21,600. Continuing with our big tech hot stocks, we have Amazon down 4.76% today, and you can clearly see Amazon close the gap to the upside and instantly started selling off, and we went risk off below 136, and we did lose that support at 133. So we're below the support trend line and we're below our risk level at 136, which increases the probability we're coming down to 128, 125, or 123, and 123 will be the full gap close. You're not getting bullish until we get all the way back over 137 to 138. So stay risk off while we're below that resistance. And yes, you can short at that level if we do get a retracement. On Microsoft stock, we were down 3.86% as Microsoft lost both of our support and risk levels at 274 and 271. And we did come all the way back down to the level we did not want to see Microsoft coming back to, which was 267. So this is instantly looking a lot more bearish, and Microsoft is a market moving stock. So this is definitely something you will want to keep in mind. And if Microsoft loses 267, it could be coming all the way back down to the 250s. So this is extremely bearish price action, which is very obvious with the high volume selling and losing 2 critical support levels. And you're now going to be looking for resistance at 274 and 279. If for some reason the bulls can get all the way back over resistance, you still do have the gap to fill at 286, but you're staying risk off below 274. On Nvidia stock, we were down 9.23%, and just last night I told you have to be very careful on Nvidia buying it at this resistance, because this is the exact pivot before another leg lower, and you never want to get bullish at resistance. While I did not think we would drop 9% today, as you can tell, that was definitely a bad place to be buying this stock, as we came all the way back down and sliced through support at 165, and it looks like we're well on our way to the next support at 161 or the gap fill just below 158. So obviously this is risk off until we either fill the gap or get all the way back over 181. So be very cautious in Nvidia unless you're accumulating it for the long term. On Tesla stock, we were down 2.7%, and Tesla is starting to break down below the consolidation wedge. And the last line of defense for the bulls is going to be right here, right around 283, because if we lose 283, we are more than likely coming back down to 258 or closing the gap just below 251. You could stay risk on above 282, but you instantly need to get more risk off if we lose that support, because you are going to see a very quick trip to the next leg lower. Now there's still the possibility of a bull breakout as long as we're above 282, so look for that resistance right around 302 and 311, and if we break above 311, we are looking for that next leg higher at 336. But right now the bears are clearly starting to flex their muscles, but the bulls have one more line of defense, and that is going to be that level at 282. In Apple stock, we were down 3.77%, and Apple also lost the risk level at 166, which means we could be coming down to 163 and 157. You're risk off below 166, and you can get a lot more risk on if we break over 170, but this clearly looks like we are going to get the full-blown correction, which should easily take us to fill the gap below. And if Apple is going down to 157, that is going to put a lot of downward pressure on the rest of the market. On the financials, we were down nearly 3% today, and we did fill the gap to the upside and instantly started selling off all the way back down to support, and we are below the 20 simple moving average. It's very likely from here that we could see the full-blown correction, which could take the financials all the way back down to 32. The industrials were down 3.47% today, rejecting from resistance and closing the gap to the downside, but still above this support right around 95. The healthcare sector was down 2.79%, continuing to make lower highs and lower lows, and the next likely support is going to be right here, right around 126, for the potential to fill out the right shoulder on this inverse head and shoulders. The energy sector was down 1.17% after getting a clear rejection around that resistance at 84, but still finding support right around 83. If we lose support at 83, look for the gap fill and support to the downside just above 79. So jumping back over to the S&P 500, we are still well within the parameters of the back test that told us the bear market is over, and we are right now just reaching the average drawdown. So while this is a very bearish day and we did lose a lot of support, this is not the time to start panicking. You just have to be prepared for a very volatile and choppy market coming up in the next month of trading. When you're not sure what to do, it's better to do nothing at all, and I gave you very clear risk levels that we need to break back above before you get bullish, and right now you need to be risk off because we lost all of our critical support and we're losing the bull trend. Remember, when you follow price action, there is no room for having a bias, and right now the price action is saying stay risk off, so do not be afraid to just sit in cash and wait for more clarity. Remember, I'm doing all of these intraday updates right there on the Stocks Channel Discord, so if you need help navigating this market, you can come join us in the Stocks Channel Trading Discord community, which you can find out how to join by clicking on the link in the description of this video. I also have bank trade alerts, which sends you all of your buy and sell alerts directly via email and text message, and only trades the ETF TQQQ. If you're interested in learning more about bank or want to subscribe, you can click on the link in the description of this video. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.